Good afternoon, and welcome to another installment of our ongoing nonprofit leadership and engagement education series. I am Joanne Nazer, the manager of nonprofit leadership and engagement at the Washington County Community Foundation. Thank you so much for joining us today to learn from our content experts about the statement of functional expense. But first, it is my distinct pleasure to introduce our new president and CEO, Alicia Walls. Welcome back to the foundation, Alicia. We're so looking forward to the energy and passion you bring to the organization. Would you like to say a few words?
Yes, good afternoon, everyone. Thank you, Joanne. I'm so delighted to be back here at the Community Foundation serving our local charities in this new capacity. One of the things I love best about our work here is that we're committed to helping charities level up and strengthen their skills, and this series is a fantastic way for you to do just that. So thanks for your time, and thanks to our speakers. We have wonderful expert panelists who bring wonderful content in all of these sessions. So we're glad you're here. We hope you continue to attend these trainings in the future, and we hope you gain really valuable insights and knowledge from the time that you spend with us. Thanks, Joanne.
Thank you, Alicia, and welcome back again. So now I would like to introduce Michael Anderson, Chair of the Washington County Community Foundation and founding partner of Imperial Tax of the South Hills. Thank you, Michael, for your volunteer spirit and sharing your knowledge to all of our participants.
Yeah, this is probably the most exciting day of the month to do this. So I'm excited to get started here. And I know that I'm going to need to share my screen. So I'll need those privileges to be able to share the...
I think you should be able to, Michael. Is it?
Okay, sure can.
Okay.
All right, that's perfect. There we go. I think everybody can see the slides I have up on the screen. You know, we're going to go ahead and get started. We have about an hour to get through this. I'm leaving ample time for questions. I know this isn't quite as interactive as the Pillars program where it's live and we can really stop for questions. But if anybody has any questions, you know, feel free to send them over to Joanne. Joanne, feel free to stop me here going through this because, you know, I want to make sure we get across some real important points on the statement of functional expenses. You know, I don't want to bore you with all of the, you know, standard stuff, but what I'm going to start off doing is just making sure everybody has a general idea of not-for-profit financial statements, the titling of them, whose responsibility they are, you know, and use that as a higher level. And then we'll dive deeper into the statement of functional expenses and get to the meat and potatoes where it really, you know, where there's a really lot going on inside of these functional expenses and go through some of the details and nuances of them. So I'm going to go ahead and get started. And, you know, the first thing we're going to talk about here are the components of, you know, the NFPSs or not-for-profit organizations, right? And with these financial statements, you know, the titling of them are different. You know, I'm assuming everybody in the audience is with some sort of nonprofit. You know, people coming from you know, for-profit businesses, you know, and you talk to them about the statement of financial position, they would say, what's a statement of financial position? It's a balance sheet to them. You know, statement of activities, you know, that would be a profit and loss statement to somebody outside the not-for-profit area. Okay, so what we're going to do is just kind of talk about these basic statements first, and then ultimately get to the statement of functional expenses, the whole purpose of this presentation. So, you know, just to kind of get everybody, you know, on the same page here, you know, I do want to start off on some basic financial statement knowledge. Okay, when you look at the top of this here, you'll see statement of financial position, and there's a date as of. Now, these examples that I have, I pulled these out of some continuing education information we have. As a CPA, we're required to have continuing education. I pulled these directly from Sergeant McCoy. So when you look at them, these aren't anybody's financial statements that I'm disclosing here. These are strictly made up financials that I just grabbed for the purpose of this presentation. So, when we look at the first one, the basic financial statements, the first statement is that statement of financial position, which is a balance sheet. Okay. That's as of a specific period of time. Okay. And, where we normally run into a lot of questions is, down this bottom section, what's considered with donor restrictions, what's considered without donor restrictions. That's not the purpose of today's. I'm just, kind of recapping some of the basic, components of these financials. The second statement that I have here is the statement of activities. Okay. Now, this statement of activities is going to tie into our statement of functional expenses. All right. So with the statement of activities, there's multiple ways to present this, and I want to make sure everybody understands where these come from. The financial statements are basically the responsibility of the nonprofits. They're not the auditor's financial statements. They're not the accountant's financial statements. They're the organization's financial statements. And with that, you guys have tremendous flexibility on how things are presented. Okay. So with these options, there's different ways of presenting them, whether it's in multiple columns, whether it's in, and I'll just show you this one that we have up above, this statement of activities. This is in a 3-column method here, where you have without donor restrictions, with donor restrictions, in a total column. Okay. Now, the other way of looking at it is more of a vertical format, where all the same information that was on this previous slide is ultimately where it's on this one. It's just a different format. Now, the reason why this is important for our discussion about the statement of functional expenses is that, the way we decide to report it and the way we show it is ultimately going to depend on the overall composition of our financial statements. Now, let's go back to this 3-column method. This is the one I like the most because I think it's easiest to look at. When we look at expenses on this statement of activities, see how we have them set up into these different line items. We have program, we have another program, we have management in general, and fundraising. Okay. So when we're looking at those 3 items, what are those? Those are components of the statement of functional expenses. So when we get to the actual statement of functional expenses, we're going to tie them back to this statement of activities. I just wanted to make sure everybody saw the relationship on where these numbers are coming from. This statement of activities is very high level. It would be way too many pages long if we had all that detail on the face of the statement of activities. That's why we have the statement of functional expenses, because it's taking the subset of these expenses, the programs, the management in general, and fundraising, and breaking them out on a separate statement so that these financials don't become overwhelming and unbelievably difficult to read because they're pages long. Okay, so that's the whole rationale on why we have, or why I'm showing you these different financial statements. Okay, and once again, going back to this other version of the statement of activities, we have these same things under expenses, program, management, general, fundraising. They're still here. They're just shown in a different format. Okay. Now, moving on to the next one, I am going to just briefly remind everybody inside of your basic financial statements or GAAP financial statements, what are you required to have? Statement of cash flows. I'm not going to go over this one. This one could take 3 hours to go over. So we're just going to, I'm just I just have this here because they are part of the basic financials. And then once again, two different methods for these cash flow statements. There's the direct method and indirect method for cash flows. So the whole idea behind showing you this is your financial statements, there's tons of flexibility on how everything is presented. I don't want anybody to look at this information I'm presenting and saying, I need to make it match exactly what Michael has on there. That's not necessarily the case. I mean, you may want to use that format, but there's flexibility in the financial reporting. GAAP doesn't mean, you're going to do everything this exact way. There's tons of flexibility inside of GAAP. It says you need to have certain components in there. You have to present certain things, not necessarily you have to use one method or the other. So just kind of compare and contrast, the direct method and indirect method, you could see cash flow statements, same thing. Two different ways to present the exact same thing. All right. So now we can kind of start our conversation on the statement of functional expenses. Okay. And, what we're looking at here isn't necessarily a full, complete statement. This is more of a disclosure that I pulled out just because it was small, easy to discuss. We're not looking at, this huge statement with tons of numbers. When we look at the statement of functional expenses, GAAP requires you you have options in how you present your functional expenses. Okay. What I'm showing everybody here today is one method, which will be, having a separate statement. You could also present it in the notes to the financial statements. There's nothing preventing you from saying, you know what? I like my statement of activities the way it is. I'm just going to create an additional note to my financial statements and present it. So what you're actually looking at here is what? It's an excerpt from a note. And you can see that, there's no title on this. This was pulled out of a nonprofit organization's note to their financial statements. Okay. But it's great to use this to kind of tie in and show you how things work, right? So with the statement of functional expenses, okay, the term function, I think everybody needs to have a general idea of what we mean by functional expenses, right? Functional expenses is referring to this classification. Do you see how this statement has columns? We have program activities, we have Omega, we have this iota, and we have a total for the programs, right? So what we're actually saying is, here's our expenses for this particular program that we're doing, the Omega program. We have $54,000 worth of salaries going into this program. We're paying out grants to other organizations of $15,000. So you can see how it's saying the effect of this program, we're expensing $97,000 for the Omega program. The IOTA program, we're at $83,000, right? So let's go back, and I'm going to drop back to my other side here where we had this statement of activities. Remember how I mentioned when we're looking at these different expenses, what do we have? We're actually detailing out what this $97,068 for the Omega program is. Okay, we're detailing out what this iota, I'm not even sure how to say that, but we're detailing out this 83,000. So now let's jump forward to this again. Do you see those numbers, how they look familiar? So these will always tie in to your financial or your statement of financial activities. They need to tie in because that's how, we know that there's completeness of these statements. Okay. So now let's bring up kind of another, and once again, what I'm doing right now, this is broad. This is high level stuff. We'll get into the meat and potatoes of it once we get further along these slides, but I want to make sure everybody's kind of getting the big picture of how these numbers tie in. So now you have your other section of it. So we did all the programs. Most of the people on this call understand what your major programs are. You know what major programs you have, and we're going to go through some of the details of these different programs. But then we have what are called supporting activities. Supporting activities are made up of what? Management and general expenses and fundraising expenses. Okay, so once again, these numbers here in the total, we're saying, we expensed $18,000 on salaries and benefits for management in general, right? $12,000 for fundraising. Okay. So if we look at this 35,000 and this 27,000 and go back to this one, what do we have? 35,000, 27,000. That's how that's tying in. All right. So we're going to come back to a different format, an actual separate statement of functional expenses that we're going to go through detail. And, hopefully I'll be at a point where you guys can ask some questions and, kind of run down through it and, make sure everything makes sense. But let's go through, some kind of highlights here that, the key points of this. Okay. So non-for-profits are required to report information about all expenses in one location. What did I mention a few minutes ago? I said we have options. That statement of function, well, that functional expenses note that you looked at, that was in a note. Okay, so that's actually number 2. But we can report these on the face of the statement of financial activities. So what would that look like? Okay, GAAP does not prevent us from doing this 3-column format and having all that detail on this statement of activities. Would it look terrible? Absolutely. Would people's eyes cross when they try to figure out what's going on? Absolutely. Would we ever do it? Probably not. I've not seen it ever in my practice. I'm sure somebody does it somewhere for some unknown reason. They probably have a really good reason, but I'm not going to be the one to recommend that, right? Let's kind of go back to this. What else can we do? We can report it as a schedule in the notes to the financial statement. Okay, so what is that? That is exactly what we are looking at here. This can be simply placed in the notes to your financial statements. Simple as this. It has to tie in. These numbers have to go back to the statement of activities. It can be very clean and concise. I would say this is used more by a smaller organization. I would say it's by one that doesn't have quite so many program activities, not quite so many different expense categories. Do I see it? I've seen it around a couple times, right? It's not that common. Now, where do we normally see this? It's normally in number 3 here, right? In a separate financial statement. Example of that is what? Statement of functional expenses. Okay, so that's what our point is today. We're going to look at one of those true statements here, and we're going to go through the details of that. Okay, but what does it have to be in one location? Can you use all 3 of these? No, it's one location. You got to put it in one place. Okay, now let's kind of move on here and talk more about let's kind of talk about more of the purpose behind this too. Once again, big picture. We're trying to get across, why do we have a statement of functional expenses? Really what I would say, the real purpose of this is really to aid donors or others in assessing not-for-profit service efforts, expenses. So what are we talking about in plain English, right? Let's just say I'm a donor and I want to make a contribution to your organization. How am I going to ever know how much of that money I donate to you. Say I donate $100,000 to your organization. How do I know where that $100,000 is going? It's going to be on this statement of functional expenses, right? And we're going to go back to that and look through it and see how that would work. But what do I want to see as a donor? I want to see that the majority of my money, if I'm donating $100,000, what do I want? I want the majority of that to go to a program. The reason why I'm donating to your organization might be, I want to help kids. I want to, support animals. I want to, have an impact on the community, right? This statement of functional expenses, the reason why we normally keep it a separate statement of functional expenses, because we really can use that as a tool to highlight our organization. So I don't want people to think of these financial statements as, that thing that the accountant comes and the auditor comes and causes us problems and then we just throw it in the drawer. What is it really? It's a tool. It's something your organization can use to highlight what you're doing. So when you see a very well-prepared set of financials, how's it normally done? It's normally done with people highlighting their programs, right? They're really showing the users of the financials, donors, what they're doing with their money that that they've raised. Okay. In addition to that, you have the supporting activities, management in general, fundraising, and I have membership development. Let's just call it management and development, management in general and fundraising. Those are the two easiest ones to conceptualize. Management in general, when we're looking at an organization, I would say, I wouldn't want to see a huge amount in management in general. Obviously, there's costs associated with running an organization. So yeah, it's completely normal to have management in general. Would I want to see 90% of your expenses in management in general and 10% in program? That tells me you're spending a lot of time running the show, but you're not really accomplishing anything with your programs, right? So I wouldn't necessarily look at that a good thing. The other thing is fundraising, right? When you have nonprofit organizations, you're really wanting to, raise funds for the organization to do what? To support your programs. Okay. Now, if you see fundraising expenses are very, 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 very high. Let's go back to my $100,000 I donated to the organization. And let's just say $70,000 went to fundraising. What are they doing? This statement of functional expenses is showing you that, what? We're paying a lot of money to have somebody take your money, use your money to go raise what? Additional money. So, typically, that fundraising, you definitely want to show expenses into fundraising. I think it's prudent. I would expect there to be expenses in fundraising. I wouldn't show it as the majority of all of your expenses that you have within the organization. Now, all of this is going to be discussed in further detail once we get to what? That, my slide with the true statement of functional expenses. All right. So let's keep running through here. Okay. So, once again, full disclosure, I grabbed this out of my continuing education, right? So I got to give Sergeant McCoy, I don't want them to hear this this presentation and then come after me and end up in the fiery furnace. I don't think it would happen, but I mean, it could. So, I want to give credit or due, because the reason why I like their information and why I chose to include these in here, they're pretty plain English. They're very easy to read. And for most people, it's getting this information in a usable format. Not everybody is a CPA, as an accountant, is, even involved in this. What I'm trying to do is make sure everybody high level understands the necessity of this statement, understands the value of the statement, understands why you want to put a little bit more effort into it, because I'm pretty sure probably everybody on the call could probably put a little bit more effort into their statement of functional expenses. Okay, so once again, going through this one, what do we have on the left-hand side? Program services, right? Activities that result in the goods or services being distributed to beneficiaries, members, or customers that fulfill the purpose or the mission for which the non-for-profit exists. What do we want to show? Majority of our expenses under program expenses. All right, management in general. That column's activities not directly identifiable with one or more program or fundraising or membership or development activities. Pretty much it's catch-all. From working with financial statements for a while, you get your program services right, you get your fundraising right, and you kind of plug the rest into management in general. Now, is that technically how it should be done? No, but that's how most of the time it's done in real life, right? Next one, supporting activities, right? And in supporting activities is fundraising, okay? Now, once again, fundraising or activities undertaking to induce potential donors to contribute money, security, services, materials, or facilities, or other assets or time, right? So, obviously you're going to have expenses in fundraising. If you had no expenses in fundraising, I mean, it is technically possible, but I would expect most people, unless you're contract funded, you're going to have some fundraising expenses. Okay. Last one is membership development. That includes soliciting for prospective members, membership dues, membership relations, and similar activities. That's for a little bit different type of organization, which I think there might be one or two of you on the call that that might fall into this. Okay, so let's go ahead and skip forward again here. Okay, so once again, I'm trying to show everybody that these are your financial statements. They're not your accountant. You wouldn't go to your CPA. Well, you wouldn't go to your auditor and say, hey, what column should I be using? They're allowed providing you technical assistance, but it would impair their independence if you said, oh, what do I need to show as my program services? Okay. So what I'm trying to do by this is just show you the diversity amongst these program services. Now, keeping in mind, how does this relate to the statement of functional expenses? This is that program service column, right? This is the first section, the section we want the majority of our expenses to be in. For example, Rice University, their major programs are instruction and department research. One of their other ones would be sponsorship research and other sponsored programs, library, scholarships, and fellowships. You can see these are completely different than the YMCA, right? How does and these are from actual financial statements, right? What does the YMCA of Milwaukee do? They just call them programs. That's it. One column, right? So that flexibility lies with, the nonprofit. You guys have ultimate flexibility in how you show this. Other bigger nonprofits like World Vision, huge, right? They break out their major programs by international programs, domestic programs, public awareness, and education. When you think about it, remember I said your financial statements are a tool. Well, maybe their purpose is, for the donors who want to see their money go internationally, that's why they have that broken out. Or, they're trying to, maybe they're known as being an international organization, but they choose domestic programs because what? They want to show the readers of the financial statements that, guess what? We're domestic too. Look at how much we spend domestically. We're not just world, right? So you see how that goes into, really the goals of the organization. The people who are very sophisticated in the financial reporting are really trying to trying to get a point across to the users of the financial statements, to the prospective donors. That's why they're doing it. Okay. And we're not going to go through all these, but we are going to talk about the Zoological Society of Philadelphia. Once again, what do they see important? Animal care. Why is that their first one? Well, that's probably their purpose, right? Same thing. But why do they show them in this fashion? I don't know. I'm looking down here, depreciation and amortization, interest expense, contributed services. I'm thinking, it doesn't make much sense why they do it. I don't know. I have no clue why they would show it that way. They obviously do. So just to show you, does GAAP, generally accepted accounting principles, tell you exactly how to do this? Absolutely not. You have the ultimate flexibility in how you decide to show this. You have the decisions to make how you want to present it. I'm showing you this because, quite frankly, I think that Zoological Society of Philadelphia looks kind of weird. But obviously, if I talk to them, they'd probably give me a very good reason on why, right? So just to show you, they're not my financial statements. They're the organizations. Okay. So now let's keep moving here. Let's start talking about, and since I've spoke a lot here, let's go back, right? So we just talked about this program activities section. We're now going to talk about supporting activities section, right? So that's what we're going to go over here. I think everybody's gotten a point that there are financial statements. We can show this however we want, right? I think everybody's got that point. But when we look at, this slide here, what we're showing is the different supporting activities, management in general. I would say that this is a pretty broad overview of what goes into management in general, and that top one being all management and administration, except for the direct conduct of program services, fundraising, or membership development activities. And remember how I said it's our plug? You put everything else where it belongs, and guess what? Everything else is management in general. Okay. And I will tell you one thing. I have had clients in the past that I've worked with who have properly allocated their management in general, not with the plug method. So there are people who have this to that level of detail. I just wanted to make it a point so you can kind of visualize what's happening. You're filling up your program buckets. Why? Programs are the most important thing. I would say prospective donors want to see high program numbers. Fundraising, I would say fundraising, you want to keep it lower, but you're still going to have expenses to raising funds. Okay. So, other items in here, financing.
Michael,
Yep.
can I interrupt you for a second?
Sure
What do you think foundations, donors, funding sources, what type of percentage, let's say, do they look at when talking about fundraising as a total of the budget?
I wish I was a sophisticated donor like that, right? So I don't have a set percentage. I would say as a guide, if you're getting the majority, 60% or higher in program, okay, I would say that's a fairly good percentage. There are organizations that will be up in the 80s and 90%. That's really exceptional, right? Mm-hmm. So, when I'm looking at it, if I saw something, less than 50% as a prospective donor, I would question it. I would say, keep in the back of my mind saying, if I give you $100,000, $50,000 is going to just keep the lights on and raise more money. So you can see where that goes. Generally, 60, 70%. I would say the majority of the ones you see are up in the 70s, 60s, 70s, 80s. You get some outliers up in the higher 90s.
Mm-hmm. Well, I think some of our organizations are smaller and then, probably have maybe 85%, that they're not spending all the money or doing sophisticated mailings or things like that.
Yeah,
Thank
and
you.
that's a good point to bring up, right? I just mentioned, I would not necessarily donate to somebody where half of their money goes to. You got to keep in mind also, you got to look at the size of the organization, what the organization is doing. There are certain organizations where, those percentages aren't going to be, aren't going to be relevant. So I think at that time, if I'm a leader of an organization, I think I would, be prepared to talk to people about the financial statements if somebody brings it up. Here's why our expenses are what they are. You know, you have nonprofits in different life cycles. Life cycle of a nonprofit, you have ones that are starting up, ones that are fully established. If you have somebody with an endowed location, they don't have rent. There's a lot of different circumstances that can skew things one way or the other. But in general, what would I do as a CPA? I'm going to help you to allocate those expenses to the categories that are going to make the readers see the value in what services you're providing. Okay, and we're going to get to that too. I'm not going
Thank
to run out
you.
of time. Okay, so you can see I'm on slide 13 of 15. So don't worry, we'll get there. Okay, so also, fundraising, what would fundraising entail? Preparing and distributing fundraising manuals, instructions, or other materials, maintaining donor lists, conducting special fundraising events. Um, when you go to a lot of these events, a lot of them are truly all fundraising related activities. I mean, there may be a component of them that could be program related, okay? But it's going to be something that we're going to kind of go over and talk about in a few minutes. And it's talking about this terminology called like joint activity or joint costs, right? So when you're having events or you're doing mailings, how you compose your mailings may be the difference between you having to put the entire cost of that mailing in as fundraising or being able to use a portion of it for what? A program. Okay. So you got to, you know, once again, it's all about the sophistication in your ability to understand, joint costs, really figure out a way to maximize benefit of those costs to be able to get it where out of fundraising into programs. Okay. Then the last column here, membership development. This is for a different type. It's for a membership driven organization. This would be for soliciting prospective members or membership dues. This is for a dues related organization. So I'm not going to go into too much detail. I mean, it's just different type of organization. All right, so let's let's just real quickly hit upon these, right? These are supporting activities for the same type, right? What do we see? Rice University has general administration, institutional development, and other activities. They have, World Vision is management and general fundraising. What do I see the majority of our nonprofits in our community? Management and general fundraising. They are similar to World Vision. Do you have to call it management in general? No. ALS, they call it administration. They don't call it management in general. Why? These are your financial statements. I've gotten the point across. I know it. I wish I could talk to everybody and see everybody, but I know I got the point across on this one. So, but you can see once again, let's go back to the Zoological Society of Philadelphia. They They got a lot of stuff. Okay. That's their way of presenting it. Is it wrong? Absolutely not. If if you're wanting to accomplish some kind of goal or purpose, well, sometimes that's what you have to do it. Does GAP allow us to do it? Oh yeah, we can do it. We just have to make sure we have certain key components. That's what we need. All right. And hey, notice we're on slide 15 here. So this is the last slide of the deck. And then we still will have a little bit of time to talk here. So looking at this, this is a true statement of functional expenses. You're going to say, well, Michael, this looks a little different than your other slides. Where did this come from? So, your CPA, your accountant, they're most likely members of the AICPA, American Institute of Certified Public Accountants. Every year, they come out with a set of financials which organizations should use as a best practice. So what do I encourage everybody that I'm talking to? Like, listen, if you're going, oh, I need to really look at my financial statements. Am I going to say, I just wing it and guess what you need in there, try to do the research, go to your GAP guide and do it? No, it's impossible. I don't say it's impossible. It's tough. What do we do as CPAs? We go to our resources. This one's called Save Our Little Charities, right? What's their other one called? Save Our Charities. So this one's directed to our size organizations, Save Our Charities. That's directed to the World Visions, the big organizations, right? Save Our Little Charities are ours. And they have complete set of financial statements with notes. Okay. Now, I left this up above here in red. What's it say? All not-for-profits are required to report information about expenses in what? One location. Either on the face of the statement of activities. I showed you that. That's the statement of activities where I told you it turned into 20 pages long. Forget it. Too messy. Or as a schedule in the notes to the financial statements. That's where that one was that I showed you. That was a note. Or as a separate financial statement. What is this one? A separate financial statement. How do we know it? It has our name, has the title, statement of functional expenses. It has for the year ended. That means it's a separate financial statement. Okay. But the reason why I'm reading this all to everyone, I don't want people to get confused, because you could read this and go, what are they talking about? Presenting this information as supplementary information does not meet the requirement. You're going to go, what? What does that mean? So what supplementary information is, it's not part of the basic financial statements. It's separate from the financial statements. So what are we taking out of this? Well, you got one of three places to put it. Where am I going to do it? I'm going to put it on a separate statement. That's where I like it. I think it looks good. What else am I going to do? I'm going to prepare this, utilize it as a tool to really show the readers of the financial statements, donors, what we're doing, right? I'm going to also show our efficiency of operations. How am I going to do that? Try to allocate as much as possible from management in general, in fundraising, to a particular program. Okay. And then how am I going to do that? I'm going to look at joint costs. Every check you write doesn't necessarily mean it has to go in one of these columns. You can write a check that is allocated to animal care, education, and fundraising, right? It can go to actually every one of these columns. It can be allocated. Your sanity might want it to go to just one because it's hard. It's hard to allocate this stuff, right? That's the hardest part of accounting, okay? So that's what I'm going to spend these last few minutes just talking about, right? Obviously, you guys know you have pressure, and I'm reading right from what I have notes on my desk. You have pressure to have a high ratio of program service expenses. I think I already got that point across. The pressure is we want to show a large number of program expenses. We know that, right? What I'm also talking to clients. Let's say I'm not in the capacity here helping you guys. Let's say I'm in the CPA capacity and I have my CPA hat on. The hardest discussions I have with any nonprofit is what? Getting from natural expenses to functional expenses. Okay. We know what functional expenses are. Recap. Functional expenses are these columns: animal care, education and outreach, management in general. Those are functional expenses. What are natural expenses? Natural expenses are what? Salaries and wages, animal and food, employee benefits, payroll taxes, professional fees. So, when you look at a regular for-profits financials, what do they have? They just have natural expenses. They don't have to worry about getting this allocated, but we do. Okay. Now, to kind of go through what's important about this, okay, and how I think that this would be an 8-hour lecture or presentation if I were to tell you every method possible to get from natural expenses to functional expenses. All right. I'm not going to do that. I want to give you guys big picture, right? And let's just go through some of these. Top line here, salaries and wages. How are we going to allocate salaries and wages? We just going to wing it? Your auditor wouldn't be happy if you just, winged it. All right. You got to have some justification for how you get from salaries and wages to, the actual functional expenses. The best way to do this is with a time study. Okay. Some organizations, they have different processes for doing this time study. Some people will do it multiple times a year, a time study where they have all of their employees, track their time, for a period of a week and say, okay, for this 1 week period, how much time do we spend on programs? How much time we spend on management general, fundraising? That method works, but what if you choose the week that you're doing everything for fundraising? You're having a big event. It skews things, right? So this process has to be thought out, right? So then you have other organizations that will look at job duties. They'll look at somebody's job duty and say, okay, we have a fundraising employee that does nothing but fundraising. Where are we going to put all their salaries? Into fundraising and development, right? Say you have an executive director. Well, that one's a little harder. Generally, we don't see a lot of executive directors' time going into program. We see more management in general in fundraising, but it can be allocated, to program services, just depending on what size of the organization. Smaller organizations, 100% possible to have a lot of program services. Larger ones, well, unfortunately, executive director gets, they're there to raise money and keep things running, right? So you can see that's a method, right? So what do you have to do? You have to have that conversation and look at it from a perspective, what's going to accomplish your goal of getting the majority of your expenses into program services. I think that's the direction I would go. What does GAP require you to do? Consistently apply it, right? They want to make sure you're not just changing this method every year. You have to have a cost allocation plan, and you have to do what? Follow it. Your auditors are going to do what? They're going to take your cost allocation plan. They're going to test it to make sure you're operating by or you're allocating based on what? Your cost allocation plan. Okay. So now let's go down to some other things that might be a little bit easier to do. Okay. Salaries and wages, I think, is a tough one. I always thought it was tough to do that one. Occupancy. Okay. I think occupancy is pretty clear. Let's say we have a building that's 10,000 square feet. And where we do our programs is what? Let's just say it's 7,000 square feet. Well, it's pretty easy to allocate 7,000 square feet to a program, right? Couldn't you use, occupancy also to be the interest that you pay on a loan? You can use that to also allocate, your utilities, janitorial expenses. There's a lot of things that go into that. So when you I've looked at a lot of cost allocation plans over the years. It's normally that one big ticket item that you have that creates this percentage. And, I will say you're going to use that method if the majority of your office or location where you provide these programs, or services are program related. Now, if that's not the case, well, I think you got to come up with a different method for allocating, right? You these financial statements are yours. You have to be the one to come up with these allocations. Your auditor is going to audit these allocations to see if they're reasonable. I would say that pretty much at this point in my career, I can make anything reasonable in nature, right? And know where that level's at. So why am I saying this? Well, I'm saying this is, because you may have thoughts on it. You may have to consult with a CPA. You might have to, see if your auditor's able to provide technical assistance in this area. You know what I mean? Obviously, they can't audit their own work. Maybe they can provide a little technical assistance regarding some questioning regarding methodologies, but that's what you're trying to do. All right. So I think I talked a lot here. So I want to open up the questions. I don't even know if we can have questions. I don't know if anybody has questions.
I think we all have questions, Michael. So,
right.
but I want to thank you for your thorough presentation, and I think you pointed out the importance of this document. And I do think that some of our nonprofits are at different levels. Some may have an auditor, some may do a review compilation, some may just do their own profit and loss statement themselves. And I think the bottom line, I don't want to speak for you, but that nonprofits can be more transparent on how their funds are being utilized. Or would you agree with that? Or
Yeah, I think that's a goal. It's to show how you're utilizing the resources. The more efficient you're utilizing your resources,
right.
the better you look, right? That's what you're trying to do.
Right. And we all want to look good. So, is there any one questions that have, and that I just think then that this is a goal of the foundations too, is that, that nonprofits show their financial resources in appropriate ways, and just to be making sure they're doing efficient and effective work. And this is just a great tool for them. I think that some of the nonprofits may not understand how this can be an effective tool.
Yeah, and with that, I mean, that's obviously my goal here. My goal isn't to tell everybody how to prepare this. I didn't go into really the nuts and bolts, big picture. It's understanding that this is why this form exists. This is what we want you to do, right? This is something you have to work towards. It is definitely an area that I would tell you from experience that is probably the weakest area on the financial statements for any organization. Why? Let's talk about accountants. I'm a nuts and bolts kind of guy. I am good at putting things in salaries and wages and occupancy and meals and entertainment. What am I not good at? Knowing how that money's reaching that program, how that money's being allocated to these programs. So what does this take? This takes the work of somebody that's involved in the program, along with what? The nuts and bolts guy, the accountant, right? That's ultimately how it works. Why do we see weaknesses in this area? Well, it doesn't always happen that way. The auditor or accountants looking at it and say, oh, well, you used 35% last year. Did it change? No, Okay, we use 35% again, right? That's what I'm trying to make everybody aware of. Like, these are yours. Make something of them. You can do a lot with them.
People need to talk to each other, different departments, or just to understand, you know, this money is being effective, but how can we show that best?
Yeah, yeah, absolutely. And I can tell you, I can sell anybody's nonprofit organization to a prospective donor. I mean, looking at it from the community foundation, I am that person that sees the value in the services we provide. I'm wanting to show these financials to other organizations. I'm happy. Why would I choose to take time out of my day? I could be doing tax returns or something like that. Why do I want to do this? Because I care about the community, right? I live here too, right? And I'm going to tell you that a strong community, a strong nonprofit or community adds a lot of value. And that's why I'm here. That's why I'm willing to talk about this, why I have excitement for it, why I am with the community foundation. It's for this purpose.
I told Michael beforehand to our participants that he does make these things exciting and engaging. And it's not my area of expertise, but it is Michael's. And I just appreciate him and his volunteer spirit. And just wanted to let you know the next session of this series is going to be on Tuesday, June 24th, and that will be talking about interns, rules and regulations, different types of rules for them. And then on June 30th, we're having an in-person session for public relations. If you haven't heard about that, and that's going to be at Core Resources, formerly Console Building, and with Krakow Communications. So if you have any questions about that, please feel free to reach out to the foundation for that. Also, WCCF Gives registration is kind of wrapping up, 12 more days to register your nonprofit. And the process is a bit different this year, of a different platform. So if you have any questions regarding that, please feel free to reach out. Again, I thank Michael for his passionate interest and support of the community. We appreciate it, and presenting information that is useful to the organization itself and those funding sources that rely on this type of information. Welcome back, Alicia, again, and I hope you have a great day. Thanks so much for participating.